Welcome back to Trade and Wait. And honestly, I don't really have nothing to say. I just want to talk to you guys about goal setting. And legitimately, there's some people out there that don't have any goals whatsoever. And that's on them. That's what makes them happy. That's good on them, right? However, there's those of us that have goals, and there's those of us that have safe goals. There's those of us that have scary goals. And honestly, I am one of the latter. I have scary goals. I have to treat this as a business or else, you know? And every business should have like operational hours, should have like a product, like what's your hours of operation? What exactly are you offering for your services? Right? Like if trading is a business, then you know what I mean? You're the client, you're the customer and the direct beneficiary of your behaviors. So I wanted to get into goal setting. Like what type of goals do you have? And what are you doing to obtain those goals? It's almost like every trade has an expected value, an EV, right? What's the expected value of your business, of your trading business? Are you trying to grow it? Are you just in it for personal entertainment? Are you in it for throwing your money away? Are you into that? I don't know what type of fetish that is, but it happens to the best of us, right? Like, but that's not the goal. That's not the goal. If you like to spend money and waste money on things, and find another hobby, find an expensive hobby. And that way, at least, I guess, in many ways, this is your expensive hobby. You're not trying to grow. You're not trying to be profitable. You're just in here, like, just in here playing around. Um, so anyway, I remember reading like books like Think and Grow Rich. I read that book like so many times, man. I heard Jim Rohn say they wrote the book and you haven't read the book, right? Like you thinking about getting rich, you want to get rich, but you haven't read the book. And in those and during the time of those studies, ran across Earl Nightingale. Earl Nightingale, he defined success. He gave a definition of success. And it just kind of stuck with me, right? Like success is the progressive realization of a worthy ideal. Progressive realization of a worthy ideal. Like you want to see that manifested in reality, right? You want to be a consistently profitable trader. You want to be rich. You want to be wealthy. You want to be able to have that life where you don't have to have that 9 to 5, where you don't have to have Carl as your coworker, as your neighbor, like ICT says, right? Like, like you don't want to have like, you know what I mean? Like who actually enjoys all of their coworkers? Who actually enjoys getting up and commuting to their place of business? I mean, it's all good. Like you can love it or you can hate it. But many of us are trading for various reasons or learning how to trade for various reasons. And my point is that you have to be responsible. You have to have a plan. This is war. This is war. And you have to treat it as such, right? Like, I mean, I don't want to say like get down and lay down, right? Like this is war. Like this ain't your average, this ain't the same as putting cans on the shelf. Or you know what I mean? This is real. It's real business. Um, but yeah, we have outcome goals, we have process goals. And I think that's the difference also, like when you're trading and you're focusing on P&L or profits and losses, right? That's like distracting. It's like taking you away from the goal, from the actual goal, right? You're focusing on the outcome, but you're not doing the things that will yield you the best outcome or the desired goal. Um, so the point is that your outcome goal is a direct reflection of your process goals. Like the process goals are the steps towards you manifesting your desired outcome goal and potentially ideally exceeding that outcome goal. Right? So it's almost It's almost like you shouldn't even be excited about winning or losing, right? Because it's actually a product of your process. It's actually a product, right? Like you won because you did the homework. You took the L and you managed the L, the loss. You kept your loss. You keep your losses small because you place your protective stop in the place that you plant for it to be if the trade went against you. It's all according to plan. So the scratches, the L's doesn't hurt that much. Yeah, I mean, like you get stopped out, you still have your trade ideal in mind and regroup, right? Take a scratch, boom, right? But your trade ideal is still in play after you reevaluate it. It's not the same as revenge trading. That's hey, my trade is still in play. This price didn't finish running stops or whatever the case is, or that high time frame draw of liquidity wasn't met yet, but it was an oversight. And you reevaluate it and you re-entered, right? Maybe with a smaller position size or full size, or right, like a portion of your daily stop loss or your portion of your daily protective stop, right? You don't, if you want to be like more positive minded. Yeah, like you're him, you're her. Like act like it, you know? Like stop giving it up for free, you know? I mean, I'm not encouraging anything else. Stop throwing your money away. If your goal is to make money, stop wasting money. And with that, also, your time is also just as valuable, even more valuable than your money. So a lot of times we think like, hey, I have to keep learning. I have to learn more. I have to learn more in order to get more. I have to learn more. But I mean, many of us have like a working system, but we don't have the patience to stick to the system, stick to the rules. And because of that, you don't trust your system. And because you don't trust your system, you get clapped, right? Because you keep changing, you keep adding to the system that already works. It's just that you don't have trust in your system, which means that you also don't have trust in yourself, right? Because you should have prepared for that. You should have prepared for what you're doing, right? If you prepared for it, then it wouldn't matter. It wouldn't matter, right? It's all part of the plan. It's all part of the plan. Anyway, these are this was a balanced price range. Let's see what time frame that's on the 15-minute. Something we highlighted on Friday, the previous video, previous recording. And this is where we left off. Price gapped up pretty much inside of this and this bearish fair value gap. Rated sell side here, traded into this 15-minute fair value gap, gapped up into this imbalance. And that would be where price is current. That's where price kind of took off from. Like, why couldn't we have taken advantage of that? We could have. We could have, right? If you were present. And it's, I mean, it's almost that like, I want to see like, all right, it's not quite the midpoint, but good, right? And all right, so what we have highlighted here is the balanced price range, and this is the, because it went short, this is the inverted fair value gap, and this is the bearish fair value gap. We were going over like, hey, which one should you have views? And honestly, whichever one you wanted, right? The bearish fair value gap, price couldn't hold above the consequent encroachment of it, and the inverted fair value gap, price couldn't hold above the high of it, right? And I just dragged that out to see what's price doing inside of there, doing whatever, right? 15-minute time frame and consequent encroachment of this bearish fair value gap. Anyway, I'm gonna delete that because there's already a lot going on. This is a 4-hour fair value gap, and you can see what price is doing there as well. So those ones were 15-minute fair value gaps, and we know that the lower time frame PD arrays are subordinate to the higher time frame PD arrays. And you can see here that inside this 4-hour fair value gap that we had a balanced price range. That was the PD array that we used for this, right? If you didn't use the balanced price range, you could have used this bearish fair value gap. You didn't use that, you could have used this breaker block, high, low, higher high, right? And this is a 15-minute chart, right? Let's just drag that out, right? Change the color to like, I'm gonna delete this though, but whatever, right? And you can see where's the midway point of that down here. Anyway, that's good money. Good money. Whatever your PD array or whatever combination of them combination there, that's on you. Like it doesn't, it's on you, right? You don't have to pull out your entire arsenal just to pull the trigger, like, you know. So boom, that should push higher. I usually make that another color. So yeah. And because it's the Asia session, you could have dropped down, right? And honestly, it would be like the 1 minute for me, but I kind of want to stay away from that if you don't need to come down this low. So we have a lot of opportunities here. And you can see that 4-hour fair value gap price did this thing around an optimal trade entry long, more than likely. I'm not going to get into none of that because I don't want to be here. I don't want to be here right now. Anyway, 5-minute chart. We have balanced price range. Let's see if price is going to go lower. Actually started recording this and then I got distracted. So one thing I did point out was that we have a Purge and Revert situation, right? Price running below a daily level and trading into a high time frame key level. And what we addressed on the previous videos, that price rated the previous week's high and then targeted this weekly volume imbalance. Once that was hit, then we have that here. And this is where we are now, right? And so the point is Purge and Revert setup. So Purge and Revert, the day of the purge, which is this day, bottom, right? And it met its high time frame draw. Then you want to count back 3 days, including the day of the purge. So that's this day, and then this day. So potentially we want to see price get above this level. However, how that works is that once price gets above 50% of the level, we want to see if, so that's pretty much it, right? This would be 50% of that range is here. So how does it work? Discount the premium. Once it gets above equilibrium, then the probability of the trade succeeding starts to diminish, gets lower in terms of probability. Doesn't mean that it's not. Obviously, it took out the intraday high or the previous day's high, Friday's high. And ideally, you want to see if price is going to find support here, potentially, or anywhere here in this range, and then potentially take out this high and then aim for that high. So in many ways, this is a 15-minute chart. ICT taught Purge and Revert on the 1 hour and did say that you can use that on lower time frames like the 15-minute, but your target may be a small target. So in many ways, this is completion of a market maker buy model. And you can have multiple buy and sell models inside of other buy and sell models. So I would say this is a potential target. And obviously you have these different ED arrays that price needs to hold above in order to reach here. Anyway, that's all I got. Thank you for listening, and step your game up. Peace.